All right. Hey, everybody. We have with us for our weekly Mortgage Minute, Tatiana Ivleva-Lopez from Prosperity Home Mortgage. Hi.
Hello, everyone.
Hello, hello.
Hello.
How you doing?
Good. I'm doing good. I have some news for you. So
Better
the
be
interest
good.
rates, about the interest rates, if you're interested to know.
Yeah.
Yeah, so let me share my screen.
Okay.
And can you see?
Yes.
Okay. All right. So the interest rates, they did go up a little bit. We can see here 7.11 on 30-year conventional, 6.63 on 15-year, and 6.61 on FHA would be about the same for VA because government loans, they have the same interest rates. So yesterday there was a Fed meeting and they signaled 3 rate cuts, which was positive for our interest rates. So today rates are improving slightly. I don't have data on that yet, but there were some positive comments about rate cuts in 2024, and high five.
Yes.
So also they said that the inflation could be higher this year than they previously thought, which is, it's possible they guess and then something else happens and they change their mind. But they also mentioned that for a long time, this rise in inflation is going to be temporary. So that's positive news. And of course, when inflation goes down, logically rates go down,
Yes.
right? Because when it costs more to buy something, the rates go up. When it cost less, the rates go down. And Fed's
I have a
goal.
question for you on that.
Yeah.
So interest rates are not interest rate. Inflation over the last year has been, as high as it has been. I'm just going to say 10%. I'm just going to throw that number out there.
I think it's been like 4%, right?
I don't remember right now how much it is. It's over the goal, which is 2%.
Yeah, but it had gotten up to like 14% or something at one point. But my question is, let's say that something was $100 and we hit that inflation rate and that thing now became $114. That was a 14% interest rate or inflation rate. And now we've gotten it to where it's $2 inflation or 2%, 4% inflation. So the inflation has slowed down, but are they judging based on inflation from the new $14 standard, or are they going back to the $100 standard and trying to get it back down there?
Oh wow, this is a difficult question because I'm not a financial person, but I would say that it's just from the point where it went, because I don't think we're gonna go down
Yeah,
to the prices we had before, unfortunately.
Yeah,
I think that's right. I think every time they measure it, it's the new standard, right?
So
new standard.
So people that are expecting us to go back down to, in my example, the $100 value, it's not going to happen. They need to realize that this is where we are and this is what the new.
Yeah, it's like our bag of chips is not going to suddenly get fuller again.
Right.
Exactly. Yeah, so that's the new norm. And that's what it's gonna be. Otherwise, we would all pay $1.50 for bread, or whatever it was 50 years ago.
And I'm surprised that inflation hasn't leveled off by now, because with all the money that was pumped in 2020, 2021, well, now, and everybody did all that spending and racked stuff up. Well, now they're saying that the credit usage rate is the highest it's ever been, not only for mortgages, but credit cards and student loans, like everything. I think they're putting in that one basket. So I'm surprised it's held on as long as it has, that people haven't adjusted to, holy crap, now I've got all these monthly payments and all these bills with not as much usage,
Oh, but that's the thing, when money gets pumped up, and people make more money, they spend more, and
Yeah,
that's what creates the inflation.
yeah.
Yeah,
And I guess I'm just surprised. I mean, maybe we're also dealing with some of the mandatory minimum wages. Like, didn't that all happen here in the last couple of years as well for at least many states, right?
I think the statewide, at a state level, they've done that.
Mhm.
So,
Okay,
yeah.
It did increase. Yeah.
okay, that was just deep thoughts by Kelly for a minute.
We totally went tangent. All right, so in summary, interest rates still went up a little bit, but they're gonna be coming down as signaled by the feds, correct?
Correct, yes.
High
Okay.
fives all around.
Yeah, everybody good.
And
Okay,
now Fannie Mae expects rates to go down by the end of this year slightly.
Okay,
Actually, their expectation is higher than it was before. Before they were expecting in high fives. Now it's good. They expecting in mid to high six.
okay,
Okay.
okay, so a little bit higher than we thought.
It's a little bit higher than we thought. And again, it's shot in the dark. It's they predicting and then they correcting themselves and then they predicting something again. It's really
Yeah.
difficult to tell what's gonna happen.
Got it, okay.
Yeah, and I have a true story anecdote to back up what we've been telling everyone about the property, the prices increasing. So Sean and I have big goals and big dreams about investing coming up soon. So with that in mind, I wanted to look into, based on your beautiful advice about HELOCs, right? And I'm like, okay, what can we do? How much has our property value increased? And I will tell you that we bought our place in March of 2022. So just a little over 2 years ago.
Right as the interest rates started going up, as everybody expected prices
Yeah,
to start
It
coming
was
down.
right as they
Yeah.
started going up. So we did get a decent interest rate there. And we had our appraisal done last week and it came back at over $300,000 higher. It was
Which
It
is
was
an average of
incredible.
10% per year for us.
It was
of-
10%
yeah, per year
over per
appreciation.
year for, yeah.
Yeah.
That's
But
amazing.
Yeah,
it's amazing, but it's like, guys, buy your house now because what you can afford right now, you're not gonna be able to afford next year. And in our case, we couldn't have afforded it.
even a couple months later, because of the interest
Because
rates.
it's right.
Yeah,
But those property values are increasing so high, and whatever our interest rate's doing, Tatiana, you need to correct me if I'm misspeaking here, but it seems like, yeah, they're gonna kind of do this, but we're not expecting any significant drops or.
Exactly. And and history repeats itself. And I have this nice slide on that right here. For example, you can see, right, 2018, 2022.
Yeah,
The interest rates, the average price was 385
okay,
and average rate was 3.49.
right,
So someone decides to wait until rates drop and they wait until 2024. The average price goes up to 540 and average rate goes down to 3.11. So it's a pretty
so you're
good.
saying that they were sitting at 4.94% and they would have had to pay 385 for that house, but they were waiting for the rate drops and they finally happened. At
Yeah, so
3.1.
and here
Yeah.
here are the numbers. So actually, the payment in 2022 went up
Wow.
by $205. So yes, they did wait for 4 years. They sort of saved up $9,800 because they didn't pay that much.
Yeah,
However, they missed out on $155,000 appreciation.
yeah,
And then they could have refinanced in 2022 and gotten that lower interest rate
yep,
and
Exactly.
still like had that lower price.
Yep.
Exactly. And the same thing right now, we're gonna wait for rates to go down again. By how much down and how long it's gonna take?
yeah,
What's gonna happen to the appreciation of the property? So
Yeah.
that's exactly it.
it's actually pretty simple math. If you don't just look right something right in front of you, but you look a little bit farther out, and you'll see, okay, yeah, maybe I'm saving right now $200 a month,
Yeah,
or even 300, but then I'm gonna miss out on appreciation.
That's right. That's right. You have to look at the 5-year span of real estate. That's the span, so that you can realize what is it going to cost you. That bird's eye view gives you a better perspective on everything.
that's true. But, and I think that you also, like, I understand the mindset of people wanting to wait, right? I come from farmers, and we're frugal. We want a deal. We don't like debt. I mean, that's been hard. You know, I'm talking about this HELOC, and I'm like, that doesn't sit right with the blood that pumps in my veins. And when I talk to my dad about these things, I mean, he thinks that I am just going off in crazy town, and I don't know what's coming my way. And he needs to like make sure he has a room for me and all my children in the house when it comes crashing down. And I pray that's not ever going to happen. But that mindset, it's really, really hard to see the numbers, right? When you see, like, I would never tell my dad what we spent on the house unless he asks, because I'm not going to hide from him. But it's like, it's insane. And to think, you know, for people to look at the numbers that we're showing them and saying, hey, this is what historically happens, you need to do it now. It's hard to get their minds wrapped around it when they've been thinking they know something for so long.
Yeah, and you have the media,
Yeah.
you know, given that market's going to crash,
Yeah.
or, you know, with the new NAR news, you know, now real estate's going haywire. You know, everybody's always scared of something, so they just feed that.
And the different markets,
Yeah.
right? Our market is very different than, say, Iowa. I always throw Iowa under the bus. I mean, I have farmer family in Iowa too. I love Iowa, but the property rates everything's different in Iowa.
Yeah, that's right. All right.
Yeah, and about all this news, changes, nobody likes changes. And it's, whenever something happens like this, the sky is falling down, but then we figure it out and it works out fine, and maybe even for the better.
For the
That's right.
better.
That's exactly
Yeah.
right.
We're actually going to do our market report on that topic today. And yeah, I mean, we're kind of excited about it.
Yeah.
So
I think it's going to be some good changes.
Yeah.
That will be interesting to watch. I'll watch.
Yeah.
Okay.
Yeah.
Yeah.
Gotta
Let
watch.
Val know. Good night, Val.
All right. Okay. Anything else on interest rates? Which at some point I am going to ask you if there's anything changing in the lending industry with the new regulations. Like, are they working to incorporate the buyer fees and stuff? But I know it's too early for that.
And we're
So
just
just kind of be
talking
ready for
about
that.
the VA
Yeah.
matters, like what's going to happen. But I think
It's a little bit too early, and it's not going in effect until July, which is a good thing. So it gives us time to figure things out.
That's exactly right.
Yeah.
Yeah, but we'll see. I think the biggest thing is VA. You're right, Kelly, because everything else, it's not gonna matter to
That
us.
kind of effect.
Yeah.
Yeah. Well, so not really speaking of that, but anyway, the other topic, speaking of my mind, the other topic we wanted to discuss was, whenever somebody reaches out to us and they're looking for a quote on interest rates, and they're saying, this lender gave me this interest rate, this lender gave me this interest rate. What is it that determines the individual's interest rate that they're going to get on their actual loan versus the advertised rates and so on? What are those specifics that determine that?
Yeah,
Right,
and I'm gonna piggyback a question on that real quick. Why we can't believe the number on the postcard that we get in the mail is definitely our number, like a coupon.
It used to make you so mad when you were lending.
Because it's very generic. It's when somebody asks what's the rate today, I want to ask how much houses cost in Virginia, right? So I mean, it's such a broad question, and there's so many things that can affect the interest rate. Right before this, our meeting with you guys, I was talking to a client who asked me the same question, and I said, I hate giving you a quote right now without doing an application, because there's so many things could affect it, not necessarily in a bad way, but in a good way. And so I'm gonna give you this rate right now. You're not gonna like it, And if I would do the application, I could find something better for you.
Yeah.
So and it doesn't cost you money, it doesn't cost you anything to do that application. So it always encouraged to do it. It's for clients' benefit.
Yeah,
Maybe
yeah.
they'll spend 5 extra minutes completing the application, but at the end, they're gonna get better deal, better
Yeah.
rates. To me, it makes sense. But
Yeah.
let me share this with you. So what does affect interest rates? Obviously, the credit score, right?
Mhm.
So we have different tiers for if your score is 780 and above, you're gonna get the best deal.
Mhm.
For some programs, even 740 and above is gonna be the same. Some do have little, adjustments to rates if the score is 780. Then we go to between 700 and 720, and then 680 to 700, and so on. The lowest credit score that we work with on FHA loans, for example, 580, on conventional 620, and of course, the lower the score, the higher risk for the bank and higher the interest rate.
Yep.
The down payment plays a big role as well. We're gonna put 3% down, we put zero money down, 5%, 10, 15, 20, 25, 30. Sometimes, when you put more than 30, it doesn't make the difference. In some programs, putting 50% down makes the difference. So it all depends on the program and on the loan amount, because we also have the loan amount tiers. We have conforming loan limits, we have high balance conforming, we have non-conforming, or also known as jumbo, and those, depending on those loan amounts, you're gonna get different interest rates,
Yeah.
and different down payment requirements and credit score. So that plays a big role. And type of property, believe it or not. So if we're looking at condo versus townhouse or single family home, the interest rate could be higher than on townhouse and
Yeah.
single families. Or if somebody is buying a modular home, also could have some effect on the interest rate.
Yeah. And there's an interesting point I want to make on your type of property with the condo and townhome. What's so interesting that a lot of people get really, really confused is a condo is an ownership type, right?
Yeah, it's not a
It's
structure.
not the structure. So we oftentimes will show, as a matter of fact, we even just sold one. It was a townhouse structure, right? So a connected multifamily connected dwelling that had an HOA, which is like just a homeowners association, but it was also set up as a condo structure. And so that
Condo ownership.
would be condo ownership. So that would be what Tatiana's talking about. Like it might have a higher interest rate because of the condo ownership structure and not necessarily the
building
housing
structure.
physical building structure. So
Yeah.
that's always a source of confusion
Yeah.
for a lot of buyers.
It is a great point, exactly, because
Good job.
good job. Sometimes I see even single family dwelling as a condominium. We don't
Yeah.
really have that, like here. I don't think Virginia Beach, for example, does.
Okay.
But that's, it's just a type of ownership, just
Yeah.
like co-op, for example, right? It's
Yeah.
also, that's also different.
Yeah.
We can do a presentation on condos.
We should do that, because that's a lot of things that confuse. I have that conversation
should,
all the time,
yeah.
especially if I'm in a townhouse that's a condo. The
Yeah.
buyers, they just don't get it until you explain it to them. So
Do you loan on co-ops
We do in DC.
in DC? Okay, all right, sorry.
Yeah.
Okay.
we're tangenting all over the place today.
I'm
Okay.
gonna jump over one bullet point and talk about location.
Okay.
Okay.
Location also could have effect on the interest rate, and actually it kind of goes together with type of property. So in some locations, condo does not have any adjustments, the rate on condo. But in some locations, there are adjustments to the rate with a condominium. So, and in general, location could positively or negatively affect the interest rate. There are some programs right now available that gives better rate and also has some additional perks depending on not only where person is purchasing, but where person is living at. So that's why I'm saying, you know, there's always some new programs come out that some lenders have, some don't, and it's always better to do the application, because when I'm quoting someone, I don't know where they live, right? And I'm not gonna, you know, like get all that information. That becomes an application basically.
Yeah, right.
Just to give a little quote. That's why it's always good to do the application
Yeah.
to get accurate quote. And occupancy type is a huge factor. What are the types of occupancy? We have primary residence, we have vacation home, or also they call it second home, or investment property. And depending on the type, the interest rate is going to be different. The cheapest one is a primary, then vacation home and investment property, they typically have the same rate, and it's higher than on primary residence. But there are some options for vacation homes with a lower interest rate than on investment property again. So there's so many different options and programs that but it definitely, occupancy type is a huge deal.
It's almost like the more skin you, the borrower, has in the game, the lower your rate will be. You know, they figure you would walk away from a vacation home quicker than you'd walk away from your primary residence, right?
Right, and or you choose to make payments. If you're struggling, you'll choose make payments on the primary home versus on vacation, because you don't want the bank to take your primary home. You live there, right?
Right.
And you will forego the vacation home. Okay, well, big deal. I don't have my lake house anymore.
Yeah.
Yeah.
Well, I think so my visualization for helping people understand why it's so hard and almost not awesome to get those postcards in the mail with the blanket interest rates is because if you think about it like this artisan pizza restaurant, right? They don't do cookie cutter pizzas really, right? And you go in and everything is a la carte, all the toppings are a la carte. So you have somebody go in, hey, how much is a large pizza? And it's like, well, I can't tell you it's $10.99 because it depends on what you want on it. You know, just a pizza. Well, what kind of cheese? We have like 12 different cheeses. You know, do you just want mozzarella or do you want like the high end flown in from some wherever?
Truffle cheese.
Yeah, what comes? Well, you know, just a plain mozzarella vegetarian pizza. Okay, well, great. What kind of vegetables? You know, well, green peppers are a lot cheaper than avocados. You know what? And that's what it is. It's like your credit score. What kind of cheese? Your down payment. What kind of veggies do you want on it? Your loan amount.
What kind of crust you want, right?
And then the advertisement on the postcard's gonna say large pizza, $9.99.
Yeah.
But you walk in there and you're spending $35 on that pizza by the time you actually get it.
Yeah, when I get my favorite pizza, yeah, it's a really high pizza. Or I'm like, I just want the crust, man. Like for you, $5.99.
It's a great example. You're full of great examples.
Oh, you don't even know. This girl is so good at this.
Oh my Lord.
I always lose arguments because she'll give analogies. It's like, okay, you win.
Thank you.
All right, but this is really helpful because we do get this question a lot, and so we have new clients that'll ask us, hey, what's the interest rate, and then we'll always put them in touch with you. But now we'll have this video that I can send over to them as well, so they're at least prepared for the conversation.
And I love this slide. Like I think
that's a pizza menu right there.
I'm gonna put little pizza icons on it though, and Tatiana, I'm gonna give you a chef's hat like over in the corner.
That's gonna be the thumbnail, isn't it?
Yeah.
Yep, there you go. All right,
Was agreed. I created one more slide.
Okay,
If you don't
excellent.
mind, I'm just gonna put it here, so it's gonna.
Yay, we have contact info.
Okay, everybody, we're gonna give you a second to take a screen snip of this, save it, get in touch with her. She's amazing.
Yeah, yeah.